Hey, Bulls and Bears YouTube family, it's Tuesday, February 1st, 2022. Welcome to February. And we're about 1/12 of the way through the year 2022. It's going to be interesting to see what the rest of the year brings. But welcome to February. We've got a lot to talk about. Let's talk about what the money creators are up to. Are they really unwinding their balance sheet? Now, there's a few people, and I read your comments. A few of you down there said the Fed's not going to start shedding assets from their balance sheet until March. Now, there's been some talk of shedding assets from the balance sheet, but the talk that's definite, or what they're saying is definite, is that they're going to stop all asset purchases by March. But there's some evidence that I've uncovered that's going to show us that that's not happening as of yet. So let's go ahead and take a look at a chart here. Now, why is this important? Because rates will rise. If the Fed takes a hands-off approach and stops buying all these bonds, assets, securities, treasuries, then the natural force will be higher interest rates. That's the natural direction if the Fed were to take a hands-off approach. Now, they're saying they're going to start taking a more hands-off approach, but we have to look at what they're actually doing, not just what they're saying. So what do we look at? We look at charts. Let's take a look at the balance sheet and see what's happening. Okay, and this is going to tell us the direction of the economy if interest rates are allowed to rise. But it doesn't look like there's much of a trend change at all. Let's go into a one-year chart here on the Fed balance sheet. We see the same pattern basically, which is a dip and then new highs, a dip, new highs, dip, and new highs. Now we see this recent dip here, and this is updated as of January 27th. So will this be just like all previous dips where the Fed just continues to buy more assets and continue to all-time high balance on this asset sheet? Here we are February 1st, and we're not seeing much of a trend change. Now, of course, we're going to keep an eye on it, and we're going to see if they're doing what they're saying that they're going to be doing. But it wasn't supposed to be that they were going to start doing this in March. They were supposed to start reducing the purchases and then be fully finished with all purchases by March. So technically, we should have seen, a smaller increase in this balance sheet. But again, look at the trend. It doesn't look much different, does it? It's increasing at about the same pace as we've seen over the past year or so. Next, let's talk about what Bank of America is out there saying. They're saying they expect the Fed to raise rates 7 times this year to fight inflation. Again, something I don't believe that the Fed is going to do. I believe if they do begin the rate hikes, after a short time, you're going to see them reverse that. And who knows, this could be a way for a lot of big money to scare other traders out of stocks. Then they can come in and buy the dip. Who knows why they're saying this? But we've seen a lot of warnings and expectations from big banks, mega banks, in the past, and a lot of them have turned out to be wrong. Now, also, we have to look at the yield on the 10-year Treasury because that's also an indicator of what's happening behind the scenes. Because again, if the Fed can take a hands-off approach, if they do that, you're going to see yields rise, interest rates rise. So let's take a look at the 10-year Treasury yield. And we'll just look at a 1-month chart on this one, and you can see we're not breaking out to new highs. It's still hovering around the highs that we saw earlier within the previous 30 days, but it hasn't increased. When it gets past this rate here of a 1.86, and if it continues to go higher, then you know something is definitely changing with what's happening behind the scenes there with the money printers. So let's take a step back here, folks. What does this all mean? Well, it means that the cost of living is going to continue to rise. I don't see the money creators coming in and just crashing the markets and stopping inflation. And they've even said that they don't plan on stopping inflation. All they're doing is going to slow down the rate of increase in prices. Now, there's a whole lot of other things we have to look at as far as the cost of living besides just the Fed and the funds rate and interest rates and mortgage rates. We also have to look at the supply chain issues. For that, we have to look at the health crisis, which I'm not an expert on, but from what I see, there's a little bit of relief on the horizon, but who knows? It could be another variant 2.03, whatever it is, 7.0. All right, so this is a very chaotic time for the economy and for people trying to figure out plans and budgets and just finances. What do you do? Do you move to Illinois or Arkansas or Missouri where home prices are cheap? I've thought about moving to a lower priced area here in San Diego. It's definitely costing me, but I've got a lot of strings attached. I've got a family and strings attached, kids in schools, extended family, etc., including family members and extended family members with health issues that need to be around other family members like myself to help out. So it's not as simple as just moving out. But I just filled up another tank of gas, almost $70. I was looking at our monthly budget and talking to it with my wife. We're over $400 a month just in gas. I've been talking to a lot more people that have been moving in with family, even friends that I've spoken with. A lot of them are moving in with family member, or family members are moving in with them. So with all the people that are quitting their jobs, people are finding alternatives and ways to get by. And if that means moving in, getting roommates, family members moving in together, that's what's going to continue. But over the next few months, I would be on high alert. I would be on high alert because, the money printers, they don't want to just raise the rates and then have everyone pointing at them or pointing to them as the cause of a recession, if they cause a recession. Right? Now, see, that's the thing. There never has to be a recession. If you can send out enough stimulus checks, you can keep the phony GDP number going up because it's based on mostly spending. So if they send out enough checks, of course, they can avoid a recession on paper. But when your paycheck and when your dollar is buying less and less and less, you're going to feel it even if they don't officially declare a recession. All right, let's talk about ExxonMobil. With these rising oil prices, gas prices, ExxonMobil saw a surge in their profits. Let's take a look at a couple articles here. Exxon, $23 billion in 2021, initiates a $10 billion share repurchase program. $10 billion. Buying back $10 billion, with a B, billion dollars of their own stock. And of course, their profits are surging because, well, the U.S. is no longer energy independent. So now multinational corporations can make even more money. And are they going to pass those profits along to the frontline workers? Well, no, they're going to buy back their own shares. And the people at the top level executives, own the most of the stock as far as people that work at the company and stock ownership goes. And it's going to continue. I don't see anything stopping this from rising. The inflationary pressures are continuing. The stock positive pressures are continuing. Just one example, the $10 billion buyback from ExxonMobil, and these corporations buying back their own stock. So proceed as you will. I continue to be on the defensive because, something could happen and we might wake up one day and there could be just chaos because of the next, who knows what crazy thing is going to pop up next. There's talks of war. I try not to follow that too closely because there's not much you can do about it. But either way, continue to prepare. That's something that we can do. We can prepare, and no matter what's thrown at us, food, water, safety, security, have some cash out of the system, in my opinion, in case the fudge, for lack of a better word, in case the fudge hits the fan. You know what I'm talking about. Stay well, big love. Talk to y'all later. Bye-bye.